Hello folks, this is Mike Mott from Mott & Associates with our July 2014 Economic Update. In this month's video, we'll be talking about some of the events that moved the markets in the second quarter of this year. We'll also talk about what might affect the markets in the days and weeks ahead. But before we get started, please stay through the end and watch the disclosure that will be shown at the end of this presentation. After a slow start to the year, the stock market picked up speed and had a great second quarter. Several indices reached new record highs, and the S&P 500 logged the longest quarterly rally since 1998. In the second quarter, the S&P 500 gained 4.7%, the Dow grew 2.2%, and the NASDAQ gained just under 5%. After a brutal winter froze the economic activity in the first quarter, the question on many people's mind would be, would the economy do any better in the second quarter? And the answer is yes, and quite a bit better at that fact. If you look back at the final numbers that showed the economy actually shrank 3% for the first 3 months, that's quite a downturn. And though we can chalk those weak numbers up to a harsh winter and some other seasonal factors, we don't think that'll affect the growth moving forward. While we don't have the official data for the second quarter yet, some analysts are forecasting GDP growth of above 3%, and that'll go a long way towards making up this year's slow start. The jobs picture improved quite a bit in the second quarter. Nearly 500,000 new jobs were added in April and May, and that dropped the unemployment rate to 6.3%. Though we don't have the June numbers yet, we're hoping that the healthy pace of hiring will continue and the labor market will continue to improve. One other fact, the labor market actually passed an unofficial milestone in May. The country has finally recovered the 8.7 million jobs lost in the recession. Though we've still got a way to go before we're back to healthy employment levels, it's good to pause and take stock of just how far we've come since the 2008 financial crisis. Geopolitical worries dogged investors last quarter. The deteriorating situation in Ukraine and in Iraq caused natural gas and oil prices to spike. As neither situation has been resolved, we're looking at continued volatility in the coming weeks. Looking ahead, though summer is often a slow trading time, investors may see some volatility around the release of some important economic data, such as the second quarter corporate earnings data. So far, expectations are for stronger earnings in the second quarter, which we hope will support the current stock market rally. However, if investors are disappointed by company performance, then we might see a pullback and traders may take profits or reposition their portfolios. Inflation is also an issue which we're keeping our eye on. The rising food and fuel prices are one of those things that could create that 1-2 punch that may cause Americans to tighten their spending habits, which could affect our economy. So we'll always be watching that, and we'll watch the situation and try to keep you updated. Once again, this is Mike Mott with Mott & Associates signing off for the month of July 2014. I hope you found this commentary to be interesting and informative. We'd love to hear what you have to say, and we appreciate your comments in the section below, so we'd love your feedback. If you have any questions about what you've heard on this update or would like to discuss your personal financial situation, please give us a call at 941-746-3216, and we'd be happy to talk to you. You can also reach out to us on our Facebook page at Mott & Associates. And by the way, before we go to the disclosure, I just want to take a moment and say thank you very much for taking the time to watch our video. I hope you have a great summer, and I'll see you next month.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All indices mentioned are unmanaged and cannot be invested into directly. Past performance is no guarantee of future results. Please consult your financial professional before making any investment decision.